time, guys. Oh, what? How you guys been doing? Oh, horrific. Great. I look like I saw. You see it? You see how gray my hair got? I look like I saw a Kandarian demon. For you guys that watch Evil Dead 2, the big old face at the end that opens up the vortex and Ash gets sucked into the past to fight the Deadites again. That's what I look like. Look like that. Made a picture to show you guys what I'm talking about. Hold on. Let me pull it up. Just a little bit longer. Whew. Whew. Oh, what? There's me. And there's my homeboy getting dragged in by the Kandarian demon. So that's what I look like. Rough times, huh? Yeah. So before COVID started, I almost died. I had to get an emergency surgery. It spooked the shit out of me. I got a deep freeze. I cook and meal prep all the time.
Alright, put it on.
Maybe I'll cook some cooking videos, make some cookout cards. I've been thinking about some stuff like that. I didn't luck out after college. I got a freaking job doing Instacart. Then I did working at the COVID testing site. Then that drew down at the end of the year. So pretty hot. I made a game. Some of you know. You've seen it. I can bring it up later, but right now, oh, I got a message. Gotta scramble for that. Nothing special. Here, I'll be back in a sec. Alright, sorry about that. So, today, I gathered you all around. I'm gonna try the finance thing again. I'll get it back into the fitness thing. But, I don't know. I made my first auto trader. It's kind of trash, kind of awesome. For a first try, I'd say. I have a lot to learn. I read 2 books. How to Get Rich Carefully by Stephen Kramer, and I read Intelligent Investor by Benjamin Graham. So that's pretty much the extent of my financial expertise. And an issue I've been having is that someone who was going to major in finance came to me because they thought I had a couple more bricks than they did on this finance game, right? And they asked me what book they should read if they get started. Don't laugh at me. It's a kid's book. It's called Growing Money, a complete guide to finance for kids or something. A complete and completely updated investing guide for kids. Right there. Shows some people growing money. Shows you how to start a business. Tells you about stocks, bonds, some other junk. I can't remember. But it's a really good starter thing. I had read like half the Intelligent Investor at the time and all of Stephen Kramer's book, and I still didn't understand that stock dividends. I didn't know how that worked. I didn't even know really what that was. So I felt a bit silly. I read the book and I learned. So you guys should read it too. You don't learn anywhere. The Army doesn't teach you. School doesn't teach you. College doesn't teach you. Your job probably doesn't teach you. Learn it here. Learn it now. Go get the book. Book's a good handbook for the basics. Okay, everyone should own it. Read it. Okay. Yes, read Intelligent Investor. Super important. Yes, read other books. Get a good baseline going. Get a good foundation. Get them bones strong for them pitfalls. Those COVID pitfalls that are coming up. Okay. I'm jumping ahead. So anyway, I got a bunch of weird code here. I don't know what it means. I think I was trying to put in another feature, but I took that out for now. So I set the principal at 100K. This is all in Python, so like spacing and stuff is super sensitive. Got to be careful of spacing. But I set myself up at 100K for principal. Started the simulation at 2017, so I bought in 2017 to 2020 September, both years. The guy I'm investing in is the S&P 500 SPY index. I think it's less conservative than the normal S&P. So I invest in the blue chips, is what they're called, the stocks that they pick to make up their index fund to justify the claim that the stock market is growing every year. Self-look back range is 20 days, in between last 10 days and 30 days. More on that here in a sec. Probably should have been put in later. Self initial stop risk is 2%. If it drops 2% in a day, I think it sells. And then trailing stop risk is 10% or 90% of the value from the last time it checked. So, okay, so this is the justification. I'm just going to explain this now. So later in the code, it's going to say that it's going to analyze today's volume and yesterday's volume for stacked up against the range of the 20 days from 10 days ago to 30 days ago. So if the percentage is 2% less, it sells right away. And if it trails to 10% over a longer period of time, I think that whole stretch, it sells. Yep, sell. Yesterday and today, delta volume is today minus yesterday's changes over today's volume. I don't know what the rest of this crap is. I made it forever ago, and then it didn't work. So I sat down and I finished it off. I got it to work, but I don't remember all this stuff. I'm trying to make notes here. As you can see, establishes that data at closing time for the last 30 days, the data being analyzed for the trade. Oh, and I forgot to mention that it's after market open. After market open, every day gets all the data, and then uses my philosophy. So, which isn't really my philosophy. We're just getting started, but it says, okay, I got the data right after market open. If market closes, it doesn't care. It doesn't gather that data. Doesn't matter to it. I picked that because I think you get to filter out a lot of the speculation that the day ended on by doing that. Everyone got to sleep before they traded again, so the options aren't as fudged up as when everyone's alive and zooming around and speculating and causing all kinds of trouble. So I run it. They call it a back test on here. And it's a market simulation, basically a simulation of how the market did, or my investment strategy on the index. Had like 4 major dips here. Really, only 3. This one kind of doesn't count. So dip in 2017, dip in 2018, dip in 2019, dip in 2020. That's when COVID is right here, this area. When all the lockdowns started, these are the daily performance values compared to 10 days, so I should probably rename that, but whatever. Still good information. And when it dips, buy in. Pretty big dips. You got like 2 months to buy in. Exception is here. And then COVID was a big time to buy in, but the dip wasn't so bad. Like, we could have done better. There's a lot of speculation that drove it up, but it ended up finishing here. That's the deal with these candle charts. I'll explain that more, but this is where it started, and this is where it closed at. And this is as high as it got during that month, during all the speculation. It's what it could have been, but it doesn't matter. This is what matters, this bulky part. So pretty nifty. Made 49% return. We'll whip out ye old calculator here. Do some mathematics. So, annual inflation is about 2.54% over 3 years. Would have been that. And then we do my percentage of returns 49%, because I got $149,000 when I invest $100,000. Which, if you can't tell already, that's going to be a pretty sweet deal. Come here, guy. Let's make you smaller. This is getting funny. I don't need this much space. Okay. Oh, and you guys can't see me punching the numbers because my webcam's there. There. Okay, so 7.62. I'm gonna remember that because that's a chamber for ammunition. That's what the AK-47s are chambered in. So 41.51% is the actual growth we experience. We're not going to count inflation. Some people don't worry about inflation, but that is freaking silly. I hope y'all don't mind. I'm going to eat a banana. No homo. And then, if you were a high speed... Whoa. Didn't mean to do that. 7.45% times 3. That's how much growth you would have had. So, you beat the market, which I'm kind of impressed that my first crappy little auto trader beat the market. I wasn't trying, but it's not a stroke of genius here. I just put together a pretty conservative little auto trader. So it pays to be defensive if you're not paying attention. Maybe it pays to be offensive too. Maybe they're making like crazy bucks, like 1,000%. But I'm a pretty lazy defensive investor. I'd rather get paid dividends than worry about. Well, we'll talk about that here in a sec. Actually, now. Let's talk about it now. All right. So we did good. But sauce, you idiot. I don't know about stocks. Well, I don't know that much about stocks either. You know what I'm saying? You know what I'm saying? What I'm saying? I used to not. Now I know a little bit. So let me teach you the 3 building blocks I have together for you. Okay? Got some notes here. Stocks are part of companies you own. So there's 2 types of stocks. There's common and preferred. All right? So common stocks, true ownership. You actually have power over what happens at the company. You can vote on board of directors if you own enough of the company, like 10%. If not, you know, you still get to vote on some stuff. If the stock blows up, you get more of the growth from all that. But like, I think the dividends pay better. But in general, it's not as sweet as deal as the preferred stock. Preferred stock is a lot more stable, pays more often. But shallow ownership, no power. You don't get to vote. But you all get to go to the shareholder party. I got this stuff ready for you. For some reason, they didn't show it to be really cool at Tesla or Southwest Airlines. Shareholder. Let's try party. Hopefully nothing weird comes up. Southwest Airlines party. That's a Spirit party. I don't know if that's the same thing. But this is a Walmart one. I remember when I first got into this stuff, I think Obama was still president, so he spoke there. And then freaking, what else happened? They had like Imagine Dragons or some crazy band playing there. So like there was tons of money for hold on. So yeah, the party was pretty sick. It's way better than now because a lot of parties they kind of get preachy nowadays. But these are just insane. It's just a good old time. A lot more relaxed in the finance world. No one cares what you believe in. They're just worried about making money. Common stocks, yeah, we went over that. So there's two ways to make money with stocks. One way is to sell the stock, a DOI. You buy it, goes up in price, you sell it. You know. On my auto trader, I don't like that it sells here. You know, it'll wait till a percentage dip and it'll sell here or something like that. But it's got the potential of selling down here. I want it to sell like here, 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 here. Plenty of blue chips to select from. You can reinvest or whatever. So I don't know. I don't know what to do with it. I'd like it to say, okay, we're going to sell when we make 10% or 20% or whatever, whenever that happens. And then and invest in something, but invest in something when it's down here, you know, but something that it can distinguish and say, well, this is a business that's just down on its luck. Its CEO fell into a scandal, or what is it? Like recently, Colonial. So in the news, if you haven't been paying attention, it got kind of spooky. Let's look it up. When I'm talking about this stuff, I don't sound crazy, but there's this pipeline for the Southwest or something called Colonial, and it got attacked by ransomware, a company named DarkSide. And when this happened, it held it for $5 million. Held that piece of infrastructure for ransom. Company paid. DarkSide got $5 million. It was stupid because DarkSide came out with this PR statement about how they're going to do better about what targets they make so they don't hurt society or something. But they're criminals. Like, what is this, trig? You know, like, I don't know. Like, shoot me in the knee and then say, you know, I'm sorry, or I'm going to try not to hit you in the knee again. I don't know. But that's why everyone's doing crazy stuff like putting their gas in trash bags and stuff like that right now. And after that happened, I kind of got lost on this tangent here. You can imagine whatever company owns Colonial Pipeline. Colonial Pipeline Company. Colonial Pipeline ticker. Maybe it's owned by Koch Industries. Well, you can do some research, but if you can find out what company owns Colonial Pipeline, or just a gas related. Whoa, hold on. Maybe let's check that ticker. That's not the same one. That's Columbia, but CPGX ticker. Oh, it used to just come up with that. So it's going down to really not that bad today, but let's say year to date. Chart. I need help, man. Come on. You're embarrassing me in public. Ticker. And because Bing doesn't want to play nice. Let's see. Tesla ticker. Okay, so that did it. So if I say CPGX ticker, which is what I did last time, it should come up again. It didn't come up again. Maybe the company doesn't exist. Maybe I just made a fool of myself or something. But anyway, if you go into a gas company, like I have some ExxonMobil, it's not going to be doing bad because I knew it wasn't. Let's see. Yeah, this isn't dramatic as I like. Okay, so like, look here. Okay, this is 2020. I bought in like around here. 40 bucks, yeah. I got 20 bucks for every stock. So that was a nice, that was a pretty penny. That's my big earner. It was dragging me down for a good minute. I remember waking up and it was like around here, like 30 or 40 or something. Yeah, like it was like 40, like high 30s or 40. And now it's getting back to 60. It was at 63, I think. Let me see. I don't want to bore you too much with this. 5 years. Yeah, I was like at 63 at some point, and I knew. I was like, COVID's hitting. It's going to go down. And then shoop. And I bought in right here. And it went up. And I did that because they want to invest in like alternative energy. So if that takes off, they'll be pretty safe. They're hedged against it. Anyway, I'm getting carried away. So, selling stocks. So, yeah, there's gas companies that are down right now because Dark Side hit them up. And if you buy in, they're good companies. The only thing they have on a track record is a scandal that's not even their fault. So you buy in, they'll probably recover. And you'll make a pretty penny. There's your tip for the day. We got to do it quick. There's two ways. Dividends. So they pay out quarterly or an eighth of the year. And so, like, I'm trying to remember which one. I think it was Dollar General. I got some DG. Dividend. And I think they pay $5, don't they? One of them pays a lot in my portfolio. But DG ain't bad. It's always underestimated. So $1.68. I don't know how much it costs to buy in. I think that's it. $204. I bought it in a lot cheaper. I think I bought it at $100 cheaper. But you get 168 bucks every year for owning some Dollar General. Some companies don't pay dividends. Like Tesla's pretty famous for that. But you should invest so you can get dividends, because then you make money without selling the stock. That's premium. That's premium. What else? Stocks are pretty much in the middle of the risk because a lot more risky stuff's out now, and stocks are pretty tame. All the riskier stocks are going to be like Tesla and stuff that you hear in the news. So if you do some research, you're already mitigating a lot of risk, not being a contrarian, not buying into stuff that other people are. If you are highly speculative and you follow the news and you freak out easily, might hurt you. You might go buy GameStop when it skyrockets because of some Reddit crap, and then, or you'll kick yourself in the butt after the Reddit rush is over. And the whole deal is, I'm not guilt tripping you because you didn't buy into Reddit. I didn't buy into Reddit. I'm saying if you lose your mind over that stuff, that's silly. Don't do that. Don't buy into stock if you're gonna lose your mind over that kind of stuff. It should be a safer investment, though. Should be most of your portfolio, because you can't buy into a ton of treasury bonds, I-bonds, stuff that can beat inflation, because like you can only put like 10K into that. And some other things, corporate bonds, but those are kind of silly. It's just like, why not do stock already? But it's safer than crypto. Like, let's pick something, Doggy Coin, Doji Coin, whatever. Because there's going to be like a million dudes that say, you idiot, you should have bought into Doji Coin when it's going up. And, I don't know, stock. Just give me a chart for this stupid thing, man. That's what I get for using Bing. Is this going to be it? So look, a couple days ago it was at 60 cents. Now it's back down to 49 cents. But here it'll go up to 50 cents, and they'll be like, oh, I told you should have bought in. then for like a month stretch, it'll be like at $100. Then it'll dip down to zero. You know, like it's very volatile. It's silly. You want something you can kind of sleep on and still make money. Like with UVest and Exxon, I sleep on it. I don't know what it is every freaking day, but if I sold out right now, I'd make money. And then the rest of the stuff, stocks are pretty much in the middle of risk. In general, it should be viewed in the same realm as a safer investment. Stocks can also duplicate. So they can duplicate. When they reach a certain value, they're $50. They get up to 100. They'll split them in half. Apple usually does this. And then they're at $50, build up, get to 100, split them in half again. Now there's 4 stocks worth $50, so that's pretty cool. You kind of, if the way the stocks are sold and bought favors you, you can get a lot of ownership. Your votes sway more when you need to use your power. And typically, companies sell stocks to raise money without getting loans. So they'll sell some ownership, but it's not anything that's going to really change the company. And they're pretty comfortable with that, and they get to raise money. They don't want stocks to sell a bunch, because then if they're more scarce, they're worth more. So when they decide to sell their company stock, they can make more money to run the company. Stock certificates. So I got some to show you here. Here's Disney, right? That's a pretty cute one. Let's look at Tesla. So like, if you wanna buy something for a newborn baby, like baby shower, but you don't want to buy some tool, some kid tool, like a diaper genie or something that'll only last a couple of years. You don't want to buy a toy. You want to make an investment in its future. You buy it as stock, but you kind of look like a jerk because you showed up at the party empty-handed. They're like, "How do we know you bought a stock?" Other than the parents, obviously. That cute little. Let me duplicate this. Go back twice. This cute little Disney stock certificate can be hanged on the wall. It costs like $50 or $70 to buy the certificate now. It used to be the only way to prove that you own stock, but now it's kind of meaningless or less meaningful. I don't know. But you can put it on the wall in the kids' room, and it's kind of like art, but it's also like, look, you know, we invested in our kids' future. We're such good parents. Tesla stock certificate. I don't think it looks like this anymore, but you can buy it. And in college, I bought one to put it on a trash can. And I'd be like, you know, I'll put that in the Tesla stock certificate folder, and it would be the trash. That's kind of a good joke. I like talking trash on Tesla a lot. It's not that I don't believe in them. I'm kind of happy that they're able to run the whole business on, like, you know, not making a profit. Everyone's hype and stuff, but also they haven't made a profit to date, so I get to make fun of them. Deal with it. Hershey's looks good. My favorite one was the Starbucks certificate. Looks pretty cool. It's all green, like your boy, Sasacles. So, Sasa. Yeah, that's pretty much it, I think. So you can buy stocks on a lot of different platforms. You can buy them on... Okay, so how to buy stocks easy. So there's a bunch of different platforms you can trade through. You can do E-Trade. Got bought out by Morgan Stanley, which I think also owns Scott Trade. You can use that as well. Scott Trade. You can do eToro. And everyone does Robinhood. I do Robinhood too. They give you free stock. eToro will give you free stock. Big issue with Robinhood that people don't like is that they get spooked when the market freezes and it tells you you can't trade. But it's kind of a defensive thing, you know, like he's freaking out because the news, like COVID, you know, and you want to sell all your stock because the stock market's worthless now. COVID is here. No one will ever do business the same. Might as well just get the money and live okay for now. And that had been silly. I bought in during COVID, and I made a lot of money. So if you do the same, you'd make a lot of money. If you got a friend that says, hey, I'm not going to let you sell anything until this blows over, you'd be grateful now. You'd make $20 for every share in Exxon. So that's pretty much it. That's the basics of stocks. I'm glad you were able to join me and check out my auto trader that I programmed. I'm going to work on it some more, get it to adhere to my philosophy more, obviously sell out more sooner. And yeah, thanks for checking in on me. Hoping this video finds you all well. Have a good day. I don't remember my outro, guys. I'm Sophocles. I don't remember it. I remember this thing, the oogity boogity. See you guys.